Impact of Bitcoin on global markets, forecasting a 50% increase in adoption across banking, retail, and insurance by 2025. Date, February 2, 2025. Executive Summary. As Bitcoin BTC continues to evolve from a speculative asset to a recognized financial instrument, various sectors including banking, retail, and insurance are expected to witness a significant increase in adoption. Predictions indicate a potential 50% rise in Bitcoin adoption by 2025, driven by institutional and retail acceptance, regulatory clarity, and technological innovations. The following report delves into the key drivers of this anticipated growth, expected price movements, and the broader implications for global financial markets. Key drivers of growth. 1. Institutional and retail adoption. Institutional interest in Bitcoin is projected to play a pivotal role in driving its market value. The introduction of Bitcoin exchange-traded funds (ETFs) is expected to simplify the investment process for retail investors, making Bitcoin more accessible. Major financial institutions are anticipated to allocate significant resources to Bitcoin, which would bolster its price and reinforce its status as a mainstream financial asset. 2. Regulatory clarity. Future growth of Bitcoin is closely tied to anticipated regulatory reforms across key markets, particularly in the United States, Canada, and the European Union. With a favorable political climate towards cryptocurrencies, these reforms will create a more conducive environment for both institutional and retail participation in the crypto market. The easing of regulations is seen as a crucial factor for encouraging wider adoption. 3. Technological innovations. Advancements in blockchain technology are expected to enhance Bitcoin's utility in real-world applications. The integration of technologies such as artificial intelligence (AI) within the blockchain ecosystem will likely drive further adoption and market relevance, enhancing the security, scalability, and usability of Bitcoin and related services will foster confidence among investors and consumers alike. Predicted price movements. Experts have varying forecasts for Bitcoin's price trajectory by the end of 2025, with predictions ranging from $150,000 to over $1 million. Factors influencing these predictions include institutional inflows, regulatory developments, and overall market sentiment. Source 1 forecasts a price range between $100,000 and $350,000, citing the influence of the U.S. presidential election and Bitcoin halving events. Source 2 predicts a more conservative estimate of $150,000 to $200,000, emphasizing a strong market performance in 2024 as a foundation for growth. Source 3 suggests that broader market trends and the need for enhanced blockchain utility will play a significant role in determining Bitcoin's future value. Comparative analysis. 1. Source 1 highlights critical events such as the U.S. presidential election and the Bitcoin halving as catalysts for bullish momentum. Analysts believe that crossing the psychological threshold of $100,000 could trigger further upward movements. 2. Source 2 focuses on the positive effects of a robust market performance in 2024, indicating that this momentum will continue into 2025, with regulatory changes and increased institutional participation being key factors. 3. Source 3 discusses the necessity for improved blockchain utility and collaboration with regulatory authorities, underscoring that these elements will be vital for sustained growth. Timeline of events. 2024, the cryptocurrency market experiences substantial growth, doubling in market capitalization. This sets a strong foundation for anticipated developments in 2025. 2025, expectations rise for Bitcoin to achieve new price milestones, heavily influenced by regulatory clarity, institutional adoption, and technological advancements. Analysts anticipate significant volatility with varied price targets. Conclusion. The outlook for Bitcoin in 2025 is marked by optimism fueled by regulatory reforms, technological advancements, and increased adoption by both institutional and retail sectors. although price predictions vary widely. The consensus suggests that 2025 will be a transformative year for Bitcoin as it establishes itself as a critical asset within the global financial ecosystem. The anticipated 50% increase in adoption across banking, retail, and insurance sectors signifies Bitcoin's potential to reshape traditional financial frameworks and offer new avenues for investment and economic growth. This report underscores the evolving landscape of Bitcoin and its potential implications for global markets. Stakeholders must remain vigilant to the dynamic nature of cryptocurrency investments, ensuring they are well informed to capitalize on the opportunities presented by this burgeoning market. The anticipated impact of Bitcoin on global markets by 2025 suggests a complex interplay of factors influencing its adoption and price trajectory. The forecasted 50% increase in Bitcoin adoption across banking, retail, and insurance sectors highlights both optimism and underlying counterintuitive trends within the cryptocurrency ecosystem. Key drivers of growth. 1. Institutional and retail adoption. The role of institutional adoption in driving Bitcoin's value cannot be overstated. While the traditional narrative emphasizes that institutional investors will stabilize and enhance Bitcoin's price, it is noteworthy that this influx may also lead to increased volatility. The expectation that Bitcoin exchange-traded funds ETFs will make Bitcoin more accessible to retail investors is optimistic but overlooks the potential for market manipulation by large players, which could deter smaller investors. 2. Regulatory clarity. The belief that regulatory reforms will create a favorable environment for Bitcoin investments is widespread. However, the reality is that regulatory clarity can sometimes lead to increased scrutiny and control over the cryptocurrency markets, which could dampen some of the decentralized appeal that Bitcoin offers. The counterintuitive aspect here is that while regulation is expected to boost adoption, it may simultaneously constrain some aspects of market behavior that have historically driven Bitcoin's price upward. 3. Technological innovations. The prediction that technological advancements will enhance Bitcoin's utility is well-founded. Yet there is a paradox in the expectation that newer technologies such as artificial intelligence will foster Bitcoin adoption. These technologies could also lead to the development of alternative cryptocurrencies or digital assets that may compete with Bitcoin, thereby undermining its market dominance. Predicted price movements. Experts offer a wide range of price predictions for Bitcoin in 2025, from $150,000 to potentially over $1 million. While the consensus leans towards growth, the variance in predictions reflects a fundamental uncertainty in the market. The counterintuitive aspect here is that while increased adoption usually correlates with price appreciation, the influx of new investors could create a speculative bubble leading to sharp corrections and heightened volatility. Comparative analysis. Source 1 points to significant events like the U.S. presidential election and Bitcoin having as catalysts for price increases. However, the counterintuitive reality is that these events often lead to short-term spikes followed by corrections, suggesting that not all bullish momentum is sustainable. Source 2 emphasizes that a strong performance in 2024 will carry into 2025, yet this assumes a linear progression of growth. The market's inherent volatility could disrupt this assumption, indicating that past performance is not always indicative of future results. Source 3 highlights the need for improved blockchain utility and collaboration with regulatory authorities. However, the notion that increased collaboration will inherently lead to growth ignores the potential for regulatory frameworks to stifle innovation and create barriers to entry for new projects. Timeline of events. The timeline leading into 2025 suggests a buildup of momentum for Bitcoin, particularly with significant growth in 2024. However, the counterintuitive notion is that this momentum may lead to unrealistic expectations for 2025, resulting in disappointment if the actual outcomes do not meet the overly optimistic forecasts. General outlook. Despite the overall positive sentiment surrounding Bitcoin in 2025, there are several counterintuitive aspects to consider. The anticipated regulatory reforms are expected to enhance adoption, yet they could simultaneously lead to increased market control that may deter some investors. The influx of institutional capital, while generally viewed as a positive development, may create a more volatile market environment due to the potential for large-scale sell-offs. Moreover, the emphasis on Bitcoin as a hedge against inflation may mislead some investors into thinking it is a guaranteed safe haven. The reality is that Bitcoin's price has historically shown significant volatility, and its status as a hedge is not universally accepted among economists and financial analysts. Conclusion: the outlook for Bitcoin in 2025 presents a mixture of optimism and caution. While key drivers such as institutional adoption, regulatory clarity, and technological advancements are expected to facilitate growth, the inherent volatility and potential for market manipulation present significant risks. As the landscape evolves, investors must navigate these complexities, acknowledging that the interplay of these factors may produce unexpected outcomes. The transformative potential of Bitcoin as a critical asset in the global financial ecosystem remains. But it is essential to approach predictions with a balanced understanding of both opportunities and risks. The report on Bitcoin's influence on global markets anticipates a significant shift in adoption across banking, retail, and insurance sectors, projecting a 50% increase by 2025. While much of the discussion focuses on institutional adoption, regulatory clarity, and technological advancements, several key insights and overlooked elements emerge from the analysis that merit deeper consideration. 1. Strategic reserves and national adoption. A notable but often overlooked aspect is the potential establishment of strategic reserves for Bitcoin by governments. The report mentions former President Trump's proposal to create a U.S. strategic reserve for cryptocurrencies, which could position the U.S. as a leader in the crypto space. The significance of this lies in how national involvement could validate Bitcoin as an asset class. Countries like El Salvador and Bhutan have already adopted Bitcoin at governmental levels, which could inspire other nations to follow suit, potentially leading to a domino effect in national adoption. This institutional backing could stabilize Bitcoin's value and increase its legitimacy in the eyes of both retail and institutional investors. 2. The role of blockchain technology. While the report highlights technological advancements, it underplays the broader implications of blockchain beyond Bitcoin. The integration of blockchain technology with sectors such as supply chain management, healthcare, and identity verification could redefine operational efficiencies and trust systems across industries. As companies recognize the utility of blockchain, they may begin to accept Bitcoin as a form of payment, thus driving adoption. This shift could happen rapidly as businesses leverage blockchain's capabilities to enhance transparency and reduce costs, which in turn could facilitate a more robust ecosystem for Bitcoin. 3. Market sentiment and psychological barriers. The report mentions the psychological barrier of Bitcoin crossing the $100,000 mark, but does not delve into the broader implications of market sentiment. The psychological factors influencing investor behavior, such as FOMO, fear of missing out, and market euphoria, can lead to speculative bubbles. Understanding these dynamics is crucial, as they can precipitate sharp price movements that go beyond fundamental analysis. The behavior of retail investors, who may be less informed than institutional players, could lead to increased volatility and risk, which is significant for potential investors considering entry into the market. 4. Geopolitical factors. Geopolitical dynamics are briefly touched upon, yet their potential impact is profound. The report anticipates that geopolitical stability or instability could influence Bitcoin's price action. For instance, in times of economic uncertainty, Bitcoin is often viewed as a safe haven asset. However, if geopolitical tensions escalate, they could lead to severe market disruptions, affecting investor confidence and the overall adoption trajectory. Investors need to remain vigilant about global events that could impact Bitcoin's perceived value and stability. 5. Environmental concerns. The environmental impact of Bitcoin mining is a critical issue that the report glosses over. As regulatory bodies become increasingly concerned about sustainability, Bitcoin's energy consumption could lead to stricter regulations or even bans in certain jurisdictions. This could stifle adoption, particularly in regions where environmental regulations are stringent. Investors should be aware of the potential backlash against Bitcoin mining operations and the ongoing discussions regarding the cryptocurrency's carbon footprint, which could shape public perception and regulatory responses. 6. Decentralized finance DeFi integration. The report does not adequately address the impact of the rapidly growing DeFi sector on Bitcoin's adoption. DeFi platforms offer innovative financial products that utilize cryptocurrencies, including Bitcoin, as collateral or means of transaction. As DeFi gains traction, Bitcoin may increasingly serve as a foundational asset within these ecosystems, thereby facilitating its adoption in new and diverse financial contexts. The interplay between Bitcoin and DeFi could lead to novel use cases that enhance liquidity and utility, thereby attracting more users to the Bitcoin network. 7. Retail investor dynamics. While the report highlights retail adoption, it fails to explore the demographic nuances of retail investors. Understanding which segments of the population are investing in Bitcoin, such as millennials, Gen Z, or international markets, can provide insight into the sustainability of this growth. Additionally, the motivations behind retail investment, whether for speculation, hedging, or as a means of diversification, can inform strategies for engagement and education. The more informed retail investor could drive demand, influencing Bitcoin's price dynamics and acceptance in mainstream finance. Conclusion. The expected increase in Bitcoin adoption by 2025 is indeed promising, however. The nuances surrounding this growth are critical for understanding its full impact. Factors such as national strategic reserves, technological integration beyond Bitcoin, market sentiment, geopolitical influences, environmental concerns, the rise of DeFi, and the dynamics of retail investors will play vital roles in shaping the cryptocurrency landscape. Recognizing these elements can equip investors and stakeholders with a more comprehensive understanding of Bitcoin's potential trajectory and the multifaceted challenges it may face. The analysis of Bitcoin's anticipated impact on global markets by 2025 reveals several crucial points that warrant in-depth discussion. Here are the 4 most valuable points identified from the content. 1. Institutional and retail adoption as primary growth drivers. Institutional and retail adoption is projected to play a vital role in the expansion of Bitcoin's influence across banking, retail, and insurance sectors by 2025. The introduction and acceptance of Bitcoin exchange-traded funds ETFs are highlighted as pivotal in democratizing access to Bitcoin for retail investors. Institutions allocating significant resources to Bitcoin not only bolster its price but also reinforce its legitimacy as a mainstream financial asset. This dual adoption dynamic creates a robust ecosystem where retail investors gain easier access to Bitcoin, thereby increasing overall market participation. The implications of this are profound, as they suggest a shift in investor demographics, moving from a niche market to a broader acceptance across diverse investor profiles. 2. Regulatory clarity and its impact on market sentiment. The expectation of regulatory reforms is another critical factor influencing Bitcoin's growth trajectory. The potential for clearer regulations, especially in major markets like the US, Canada, and the EU, is seen as a necessary catalyst for increased participation from both institutional and retail investors. A pro-crypto regulatory environment can foster investor confidence, reduce perceived risks associated with cryptocurrency investments, and ultimately lead to higher adoption rates. This point underscores the importance of a stable regulatory framework in shaping market dynamics and investor behavior, suggesting that the regulatory landscape will be a decisive factor in Bitcoin's adoption and valuation. 3. Technological innovations enhancing Bitcoin's utility. Technological advancements, particularly in blockchain, are anticipated to enhance Bitcoin's utility and relevance in various real-world applications. Innovations such as the integration of artificial intelligence (AI) with blockchain technology are expected to drive further adoption as they can address critical challenges and improve operational efficiencies across sectors. This point emphasizes the need for continuous innovation in the cryptocurrency space. As the evolution of technology can lead to new use cases that enhance Bitcoin's appeal beyond a speculative investment, positioning it as a practical tool for various financial applications. 4. Volatility and price predictions, a mixed outlook. While the outlook for Bitcoin's price in 2025 is generally optimistic, with predictions ranging from $150,000 to over $1 million, the anticipated volatility remains a significant concern. The market sentiment is expected to mirror the post-halving volatility seen in previous cycles, suggesting that while the potential for substantial price appreciation exists, so does the risk of significant price swings. This duality presents both opportunities and challenges for investors, highlighting the need for a well-informed investment strategy that accounts for potential volatility while maximizing profit potential. Understanding the factors driving price fluctuations will be essential for navigating the cryptocurrency market effectively. These points collectively illustrate the intricate interplay between adoption trends, regulatory frameworks, technological advancements, and market dynamics shaping the future of Bitcoin in global markets by 2025. Each of these factors not only contributes to a broader understanding of Bitcoin's potential but also highlights the multifaceted challenges and opportunities that lie ahead for investors and stakeholders in the cryptocurrency ecosystem. Here are 3 famous historical cases that showcase significant impacts on global markets akin to the anticipated influence of Bitcoin. 1. The introduction of the Euro, 1999. The launch of the euro as a common currency for European Union member states was one of the most significant financial events of the late 20th century. The euro aimed to facilitate trade, enhance economic stability, and promote integration among member nations. Its introduction influenced global markets by reshaping exchange rates, affecting international trade dynamics, and altering investment strategies. The euro's establishment led to a substantial shift in how countries approached fiscal and monetary policies. Much like Bitcoin's potential to redefine financial transactions and investment paradigms globally, the euro's adoption faced challenges, including debates over fiscal discipline and economic disparities among member states, but it ultimately solidified its role as a major global currency. 2. The dot-com bubble, 1995 to 2000. The late 1990s saw an explosive growth in internet-based companies, leading to the dot-com bubble. This period was characterized by rampant speculation in tech stocks, massive investments in internet startups, and an overall sense of euphoria surrounding the digital economy. The bubble eventually burst in 2000, resulting in significant losses for investors and a re-evaluation of technology's role in the economy. However, the aftermath led to the establishment of a more mature tech sector, paving the way for innovations that would dominate the 21st century. Similarly, Bitcoin's rise represents a speculative investment opportunity fraught with volatility but also the potential to transform traditional banking, retail, and insurance sectors. 3. The 2008 financial crisis. The global financial crisis was a pivotal event that exposed vulnerabilities in the banking and financial systems worldwide. Triggered by the collapse of the housing bubble in the United States, the crisis resulted in widespread bank failures, government bailouts, and a severe recession. In the wake of the crisis, there was a significant shift toward regulatory reforms in financial markets, as well as a growing interest in alternative asset classes, including cryptocurrencies like Bitcoin. The crisis fundamentally altered investor behavior and led to increased scrutiny of financial institutions, similar to how Bitcoin's anticipated growth is expected to reshape market dynamics and investor sentiment in the coming years. The crisis also highlighted the need for more transparent and decentralized financial systems. Aligning with Bitcoin's ethos of providing a decentralized alternative to traditional banking, These cases illustrate how major financial events can reshape markets and influence investor behavior, paralleling the expectations surrounding Bitcoin's impact on global markets in the coming years. Future outlook: Bitcoin's influence on global markets by 2025. By 2025, Bitcoin is poised to exert a substantial influence on global markets, with predictions indicating a 50% increase in its adoption across banking, retail, and insurance sectors. This anticipated surge is attributed to a confluence of institutional and retail adoption, regulatory clarity, and technological advancements. Below, we explore the key drivers of growth, predicted price movements, and broader market implications. Key drivers of growth. 1. Institutional and retail adoption. Institutional investment is expected to be a primary driver of Bitcoin's adoption. The anticipated launch of Bitcoin exchange-traded funds (ETFs) will facilitate easier access for retail investors, attracting a broader audience to cryptocurrency. As institutions allocate significant resources to Bitcoin, its status as a mainstream financial asset will become more entrenched, enhancing demand and potentially driving prices upward. 2. Regulatory clarity. Regulatory developments are crucial for Bitcoin's growth. A favorable environment, particularly in major markets like the US, Canada, and the EU, is expected to emerge as governments adopt more pro-crypto stances. This regulatory clarity will encourage both institutional and retail participation, further solidifying Bitcoin's role in the global economy. 3. Technological innovations. Advancements in blockchain technology will enhance Bitcoin's utility, making it more relevant in various applications. The integration of artificial intelligence (AI) and other emerging technologies will likely aid in the broader acceptance of Bitcoin, fostering innovative use cases and increasing its appeal as a transactional medium. Predicted price movements. Experts' forecasts for Bitcoin's price in 2025 exhibit significant variance, reflecting the asset's inherent volatility. Predictions suggest that Bitcoin could range from $150,000 to $1 million by the end of 2025, with a general consensus leaning toward significant upward momentum. Source analysis. Source 1 highlights important events such as the U.S. presidential election and Bitcoin halving, which could propel prices beyond the $100,000 mark, potentially reaching $350,000. Source 2 notes the positive outlook following a strong 2024 driven by regulatory changes and institutional activity, projecting a price range of $150,000 to $200,000. Source 3 emphasizes the importance of blockchain utility and collaboration with regulators, hinting at potentially transformative market conditions. Comparative outlook. As we look closer to 2025, several trends will shape Bitcoin's trajectory. Market sentiment. The overall sentiment surrounding Bitcoin is expected to remain bullish, influenced by previous performance and a favorable regulatory landscape. Analysts anticipate increased volatility akin to post-halving scenarios, which may create both opportunities and risks for investors. Government participation. The consideration of strategic reserves for Bitcoin by various nations could further stabilize its value and increase institutional interest. Countries like El Salvador and Bhutan are already paving the way, and as more nations follow suit, Bitcoin could solidify its status as a reserve asset. Retail investor dynamics. With improved accessibility through ETFs and regulatory reforms, retail investors are likely to play a more significant role in Bitcoin's market ecosystem. This democratization of investment opportunities can lead to a more diverse and resilient investor base. Conclusion. In summary, the outlook for Bitcoin in 2025 is driven by a mix of institutional adoption, regulatory clarity, and technological advancements. While predictions for price vary widely, the general sentiment is optimistic, suggesting a transformative year for Bitcoin and its position within the global financial ecosystem. The anticipated 50% increase in adoption across banking, Retail and insurance underscores the potential for Bitcoin to become a critical asset in the broader market landscape, creating diverse opportunities for both retail and institutional investors alike. As we approach 2025, stakeholders in the cryptocurrency market should remain vigilant and adaptable, ready to navigate the evolving landscape that Bitcoin is expected to shape in the coming years.